I could see silver getting over $100 now. The silver being even more of an industrial metal, it has increased the demand. Notice how the spread, the ratio between gold and silver has dropped so precipitously. At one time last year we were over 100. Now we're about 50 to 1, again, or 60 to 1. I think that they continue to go higher. I would certainly not be a chaser here and run to buy today if you have a long-term investment horizon, I'm a buyer now. But if you're a trader or looking for it, I think you can wait for a pullback. I certainly think you'll see a pretty solid pullback here at some point. But overall, the long-term view is there's a real good chance that we could hit 6, 7, or 8,000 this year. Remember, these numbers, as they get bigger, they multiply faster.
You're seeing in the gold and silver price in China reflects the fact that the Chinese logically would prefer not to pay tax on their savings. And so they're doing that. But I'm not aware of all of the factors that might go into the arbitrage. The silver market is in real flux now. We have a circumstance, too, where the LBMA and the European markets were structurally short. And the consequence of that is that the London overnight spot price was 4% higher than the U.S. spot price, which drained the COMEX and caused silver lease rates in the United States to go from 4% to 40%. So there's a lot of turmoil in the silver market.
Veteran market voices Todd Bubba Horwitz and Rick Rule highlight unprecedented turmoil in the silver market, driven by industrial demand, shrinking gold-silver ratios, and structural shorts in LBMA and European markets. With the gold-silver ratio collapsing from over 100.1 to near 50.1, long-term upside remains compelling, even as short-term pullbacks are likely. Lease rates spiking from 4% to 40%, and COMEX inventory stress underscore systemic pressure. Chinese demand reflects capital preservation strategies, while Horwitz stresses patience for traders amid extreme volatility and accelerating price dynamics. Now, we present the clips from theirs interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
Silver being even more of an industrial metal, it has increased the demand. Notice how the spread, the ratio between gold and silver has dropped so precipitously. At one time last year we were over 100. Now we're about 50 to 1. So again, or 60 to 1. I think that they continue to go higher. I would certainly not be a chaser here and run to buy today if you have a long-term investment horizon, I'm a buyer now. But if you're a trader or looking for it, I think you can wait for a pullback. I certainly think you'll see a pretty solid pullback here at some point. But overall, the long-term view is there's a real good chance that we could hit 6, 7, or 8,000 this year. Remember, these numbers, as they get bigger, they multiply faster. It's like the first time the Dow got to 1,000. Well, the jump from 1,000 to 2,000 was humongous, but the jump from 10,000 to 11,000 wasn't that big. So the percentage gain is no longer as big to get to the next $1,000 tier. And I think that's the same thing as we're seeing here. I could see silver getting over $100 now. Okay, and look at what's going on with platinum. Other than it's down today, $200.
Yes.
But platinum is flying. Platinum was up 130% last year. And I don't see any reason that these are going to start slowing down now, other than there'll be the natural pullback that you see in any market as they move. Precious metals as a currency again, okay? Certainly that brings silver even to a greater demand, because certainly you're not going to go to the grocery store with a 10-ounce bar of silver that's worth $45,000. You're going to need some smaller change or silver. And I think that it's always been known as the poor man's precious metal, not to mention that, again, it's got a lot of good uses for it. And I think that they continue to go higher, and the potential of using it as a currency again. Our currency, the fiat currency system itself throughout the globe, is totally a con game. It is a manipulation of the federal government and the Federal Reserve and the central banks around the globe that continue to manipulate the currency under no value. The biggest mistake we ever made was going off of, obviously, the Bretton Woods in the 70s. So now you've got these worthless fiat currencies that allow central banks to create new money out of thin air. And of course, that just creates more massive debt and more massive inflation. So what's somebody to do? Well, they have to find an asset class that actually maintains and keeps up with inflation, which I think silver and gold do.
Silver's role as an industrial metal is driving rising demand, as the gold-silver ratio plunges from over 100.1 last year to nearly 50-61 today. This sharp compression signals continued upside, with long-term investors favoring accumulation despite near-term pullbacks. As prices grow larger, gains can accelerate, much like historic market milestones. With silver increasingly viewed as practical currency, small change, and fiat systems eroded by inflation and central bank money creation, precious metals are regaining monetary relevance. Combined with strong performances in platinum and gold, silver's utility, scarcity, and inflation-hedging qualities position it for substantially higher prices ahead. Let's get back to the interview.
Silver has gone from $38 to $80 in a fairly short time, means that a substantial part, by no means all, but a substantial part of the attractiveness of it is gone. Remember, too, that if you sell some and take some profits and it goes higher, making money is not the worst sin that you will ever commit. And in particular, for the S&P 500, normalizing the top 8 performers, which is to say the S&P 500 without the big techs, that you'd find that U.S. equities, X the big techs, probably represent a more dramatic valuation disparity in gold than houses do. On the side of houses is the fact that for housing, unlike almost any other asset class, a 25% down payment is considered generous. So rather than 5,000 ounces of silver, what you're really talking about is 1,250 to 1,500 ounces, provided that by buying the house, the rent that you charge or the rent that you forego covers the mortgage on that house.
Yeah.
The great attractiveness to me of residential real estate has always been that by using a conservative mortgage, a 75% first, that you can lock down your cost of capital for 30 years, fix your cost of capital for 30 years while your return on capital employed increases. In my life, earlier in my life, when I bought duplexes and triplexes, I usually, in fact, in every circumstance that I remember, was able to finance out after 5 years, which is to say the rent escalation and real estate appreciation meant that I could refinance after owning the home for 5 years, and I could withdraw all of the capital that I had invested while still having rents service the mortgage, a classical case of the point of no concern. The thing that bothers me a little bit about the housing market is that in many markets, the juxtaposition between the cost to own and the cost to rent is too high, and that rent prices are bumping into affordability ceilings. So you need to be very, very careful how you buy that home. You need to be careful not to overpay. And you also have to be concerned, particularly in a place like New York City, where the political class has decided that your house is their house, that you don't run into rent controls or other forms of confiscation and nationalization. I don't know if you listened to the new housing czar of New York City yesterday.
No.
But she basically said that New York City is going to revisit their relationship with property.
Wow.
She said that ownership is a form of control and control is a form of white supremacy. She said this.
Wow.
So I would not be in a hurry to buy single-family residential in New York, as an example. She believes, as do many politicians in the United States, that your home is not your home. It's their home, particularly if you have what they consider the indictable characteristic of being Caucasian.
Silver's rapid surge from $38 to $80 has reduced some of its immediate upside, making profit-taking a rational, not reckless, move. While long-term precious metals remain inflation hedges, stretched valuations in U.S. equities, especially outside big tech, highlight broader asset distortions. Residential real estate still offers leverage advantages, including fixed long-term capital costs and rising rental income, but affordability limits and political risk are growing concerns. In markets like New York City, rent controls and regulatory overreach threaten returns. Investors must balance metals exposure with carefully selected property, avoiding overpayment and hostile policy environments while preserving capital gains already earned. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.